The following is a presentation of TFNN. Live at TFNN, the Power Trading Hour, with your host, David White. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, David White.
And welcome all to another exciting edition of the Power Trading Hour with me, your humble, lovable, squeezably soft host. On a December 5th, as we get deep into the end of the year, we are looking at a market that's slightly higher. And by slightly, I mean 4 points, 5 points. What was it? Let's take a look here real quick. What are we at? 5 points and 2 billion shares. So we've gone from, about 2.4 billion shares to about 2 billion shares by the end of the week. That contraction in volume is probably going to continue, and watch for stocks that have high short interest rates to slowly squeeze back higher. And that's probably going to tell us a great deal of what's going to happen in the next week or so. But everybody's probably looking at the Dow out here. Did this thing tag that magic 18,000 number? And it came within 9 points. And my guess is that we probably see that 18,000 mark on the Dow next week at some point. But we'll have to see. I think they're going to tag it at least. But light volume up to the highs. Normally I'd be bearish and shorting the world today. But getting into December is a tough time to be short. I've probably been on this kick for, 4 weeks now. Basically we had every opportunity to blow the market apart. It did not. It's now pushing up at the highs. It's going to be very light volume over the next few weeks. But of course, the jobs numbers came out this morning. And when we look at how the market reacted, it certainly tended to be a great deal of up and down early in the market. But by the end of the day, everybody's saying, yeah, things are pretty good. And, of course, the downside of that is most people that look at the market now are saying sooner rather than later, and nobody's saying that the Fed will not raise interest rates in 2015. The question is whether they do it in the June meeting or in a meeting after. But my guess is that the jawboning will start somewhere in the first week or two of next year, where Fed people are going to say, well, it's the economy's jobs doing about as good as we can expect. Time to start at least letting those market rates tick up a little bit. And I suspect that's when we're going to have our first dip sometime early in the new year. As always, we like to start off with a little bit of history. On this day in 1996, Federal Reserve Chairman Alan Greenspan was speaking to the American Institute in Washington, D.C., and had this to say that will probably be played for years to come.
How do we know when irrational exuberance has unduly escalated asset values, which then become subject to unexpected and prolonged contractions, as they have in Japan over the past decade?
And that's it. How do you know? And is it like Japan? I have an alternate theory of how things are going to go forward, and we'll get into that in just a minute. The Chi-Coms, probably all about the Chi-Coms. Chinese Communist Party has expelled former security czar Zhao Yongkang, the highest-ranking politician to be purged from the party since the days of Mao and his great deal where he basically took them all out in the rice paddies and shot them. The news was also released at midnight Chinese time, which is really talking about trying to bury the news out there. But I guess they wanted to make sure that people outside the country saw it, people inside the country not so much. But interesting that they did it at midnight. No discussion as to where he is, as if he's assumed at room temperature in a rice party somewhere. But the Chinese continue to target those that have been the most corrupt, and probably the highest dude so far to be purged from the party last night. I think there are some reasons why a lot of people think that this is true. But I am showing a chart here that I saw come across. It's probably fairly interesting, and that is 6 months, Shanghai stocks are up 43%. I think that probably tells you, if you're thinking of a bubble, that would probably be a good example of one. And it's just one of these things where the market has gone parabolic, and if you look at this chart, it's hard to not think that you could at least get a 50% retracement. And my guess is that retracement could come as short as, over a period of as short as maybe a couple of months. So what took us 6 months to get here, or 7 months, could come back in 2 months, or at least half of that. That still wouldn't break a bull market in this, but I've been looking at charts pretty much all week, and I think we've got weakness coming in the first part of the year. My guess right now is that we're going to have two things happen. Part of that happened today. That first part was, of course, the dollar index. It's up 65 cents. Looks to me like the dollar index wants to go break 92, and I mean right now. I'm not looking for any pullbacks or anything else, maybe sideways action at best. But it looks to me like with the interest rates starting to rise here in the United States, more people are going to be wanting to buy dollars, and that's going to put additional impotence into both the market and the dollar. At the same time, I think we can see huge amounts of cash leaving something like the Shanghai stock market and coming to the United States. And most of the times it'd be pretty good. But my guess is that especially a lot of the exporting companies in the indexes are going to be rather hard hit, and probably didn't play or pay or think that we could have such a violent move back up to the upside in the dollar. And I'm looking for 92, and I think that there's at least a 50-50 chance that we blow through 92 and continue on. These, especially FX markets, love to travel in a straight line. And it looks to me like we could have a confluence of events, starting with a huge blowout of the Shanghai stock market to continue and move our markets also. But to me, this is the kind of chart that keeps me up late at night, thinking that if we think we have world instability now, and people that are asleep at the wheel when it comes to international politics, this could drive these, most all these places in the world are already on fire. I think we could go to a blast furnace in a matter of months if some of these things start to collapse. But that would be it. Yeah. Anyway, that is interesting. I wanted to go right to a few stocks. The first one is the TLT. And, right now, you can't say that we have a lot going on, but to me, I think you can make a case that we have an ABC down back to the 112 area of the September 17th. Let's just do a quick expansion out here. That's the bigger one, 127. Now let's do the smaller one here. That's the A, that's the B, that's the B, and that would be the C. And that would take us to 113.34 on just a 1-to-1. We would have done a 48.6 retrace in the TLT. And 113.34 is close enough to 112.44, which is that last low, to make me think that we certainly could be set that way. Let's take a quick look at the TBT. Got a similar thing going on here, except this one would take us to $40.03 on the TBT. That's Tom Baker Tom. And what do we have? Let's go back and see what we got. We have anything? There's nothing out there in a number of years. So you'd certainly have to think that we're going to get at least a retest of the $46.32 spike low of October 15th. And it's hard for me to say. Well, I mean, I guess maybe you could say this is the ultra short. So that's actually an ABC up. Breadth? Is it bad breadth? Anyway, you could say that that's an ABC up. Let's see what that would be. That would be 46 on the low, 53. Oh, 46 on the low, yeah. Okay. So if this is an ABC up on the TBT, the 1-to-1 would take you to $56.72, and that's right smack dab in the gap down from the 1st of October. And so I think you've got some synergy between a lot of these charts out here, and I think they're lining up for at least tests of previous highs and previous lows. This one probably looks a little bit better to me out here in the fact that we continue moving back up in the TBT up to that 56.72. So what else do we have going on out here? We've got a lot of stocks moving. Want to get into those a little bit sooner rather than later, but I would be very wary of that. I got a question in the den. Take a look at these in just a second. Oh, we're getting to break anyway. In the meantime, if you would, give me a call, 877-927-6648. Did I do that right? Yes, I did. 877-927-6648. You can also email me today at path@tfnn.com. That's P-A-T-H at tfnn.com. And, of course, post a message in the den. We'll get to it in a minute. But make sure to give me a ring. I will be in the TFNN offices at the 4 o'clock hour for the Tom O'Brien Show, too.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. Check out the new look of Tiger TV. Now you can see all hosts, charts, and computer screens live in high definition.
Whether it's Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, David White, Larry Pezzamento, Andy Hecht, Thinkorswim, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV. Now, crystal clear in high definition, 24 hours a day, 7 days a week. If you haven't seen the new look of Tiger TV, then visit TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Dave takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
And we're back. We've got lots of questions in the den, and we'll try to answer as many of them. Basically, we've got breakouts on Goldman Sachs and JP Morgan and Citi, and all these things are breaking out. Volume, is it going to be huge? The answer is no. So what can we do? We need about 5.5 million shares. On Goldman Sachs, got about 2.5 million shares today. Does that mean it's going down anytime soon? I don't think the answer is yes. I think you can see these things probably toy around up at these higher areas. Maybe Goldman Sachs going to 200 by the end of the year, something like that. To me, that is not probably worth playing. If you had volume come in, and I mean something like 18 million shares on JP Morgan, we've got 13 today so far, with about an hour and a half left. So it's not a ringing or endorsement of these highs. Does that also mean that we're pulling back? The answer is probably no. These things are probably going to hang around and move up into the end of the year. But I've been playing this little clip for, a week or so. But let's play it a little bit again.
Let's put some lipstick on this pig.
That's exactly what they're doing. This is the time to trot out those pigs and put a new dress on them and put some lipstick on them and trot them all out to the end of the year. This is nothing more than a lot of end-of-the-year window dressing for a lot of funds. And if they have to go out on margin, which a lot of them probably, some of them are probably leveraged already. But this time of year, you're going to find margin probably up at the highs of the year. as they get confidence that these things are not going to sell off, they'll go ahead and take these things up and then try to slowly exit them and or cause a short squeeze. But I am looking at them. So that's it. But anyway, just don't see, we got lots of volume. It's going to be a little different on those. But Goldman, let's take a quick look at BAC. BAC, it's probably going to be a little bit better. Could it get up to 1797, the March 21st high? It could. I just don't see more than about maybe 1 or 2% higher till the end of the year in the indexes. So anything higher is going to be muted. Most of the action, I suspect, from now on is going to be short squeezes in a lot of these stocks before the end of the year. And it's probably not going to put a significant push into the indexes. Could we see the 19,000 on the Dow? Is that right? Let me look here real quick. 18,000 on the Dow. But to me, that's not a big deal either. But everything is showing me maybe a couple of percent higher. So maybe we do hit, one more century mark on the S&P before the end of the year. But I just don't see a whole lot before next Friday, and I don't see much after that. And like I said, volume's already tapering off. Does that mean we're going to sell off before the end of the year? I don't think so. I think we're going to be up here, and we're probably going to see ranges like this that are within 10 points for the rest of the year, at least on the S&P, 10 points up and down in a trading day, which isn't really enough to interest me in index trades. So anyway, I don't think that there's anything in most of these that I've looked at already. I don't think that there's anything in the way of ABCs. They're basically breaking out of these and breaking above these highs. And, if they come back and test the volume of those highs on lighter volume, maybe you get a little move. But frankly, I think a lot of these things are going to hang out here till the first of the year, and you're going to get an opportunity to go short them. So make hay while the sun shines if you're thinking about going long. I'm thinking about going short. And I think the home run ball is just around the corner. But I digress. Anyway, let's go through some of these other companies I wanted to go through that are moving today. The first one is American Eagle Outfitters. Of course, these clothing companies tried to put a little lipstick on those pigs. Got it back up, pushed it back up. But the truth is in the pudding, the eating of the pudding, and the pudding was probably pushed out by the guy that's now under fire everywhere, Mr. Pudding himself. Of course, Mr. Cosby, the Cos. Anyway, American Eagle Outfitters earnings came out. Sales are horrible. What else can you say? Right back into the gap. Volume's going to be great. These retail stocks, for the most part, look rather poor. We'll be back in a minute.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
If you're an active trader looking for that extra edge when it comes to trading and investments? Then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
More. Just one comment. Somebody's talking in the den about Bill Cosby. I have no inside information whether he did anything or not. I would hate to be innocent and be in his shoes. But what I do have to say is that if you haven't ever seen it, it's on Netflix right now. You should watch 12 Angry Men, because they're ready to throw this guy, have him hung. And by the end, we actually find out that everything we thought we knew, we didn't know at all. And that's why there are trials and trying to go back and prove something. I would just hate to be in his shoes if he's innocent, because there's no way to prove that he isn't. And for those people that say, well, there's so many people that say that. Well, everybody these days, especially a lot of the people I know that have accused him, like Janice, the ex-supermodel, have lied about everything forever. So at least some of those people I know are totally full of it. Some of them may be or may not have a true story. But 20, 30 years later after it, very hard. And even with great evidence, as in 12 Angry Men, you find out that maybe it's not quite what you thought it was. And probably a great movie to see I spent 2 years on actually a year and a half on a grand jury before being tossed off of it because the prosecutor found out I wouldn't indict somebody because they wanted me to indict them, and although there wasn't probable cause that a crime had been committed, so they tossed me off and tossed me and several other people off, got other people back on, so they could indict these guys. They happened to be cops at the time. I went and complained to the judge, and he went and rattled the prosecutor's cage. The old saying is that you can indict a ham sandwich, and I've seen the manipulation of the court system to go and get people. In fact, some of the people that were involved are now congressmen. In fact, one guy I saw the congressman, it was either 2 or 3 years ago, came out and said that people had spit on him and done other things, and there was videotape, and nobody was within 15 feet of the guy. So that we know he was a liar, but he was lying then. He was trying to get a couple of cops roasted back then. So I don't know. I've seen the other side of this, which is false accusations, people trying to be railroaded. I have no idea if anything ever happened, but if you're ever in a jury, I expect you to do the right thing, which is not have the mob mentality that we see now. Maybe he did something, maybe he didn't. How do you know after 20 or 30 years? It's hard to say. Anyway, we were looking at Facebook. I was out in Hollywood forever. I never heard one word about Bill Cosby. I heard everything about everybody else. There's not a lot of secrets out in Hollywood if you want to do weird stuff, and I heard about them all. And Cosby was not one of them. Normally you'd hear somebody be bringing, I'm not shocked when I hear about a lot of them because I've heard the rumors forever. But he was not one that anyone ever came up with a rumor on. Anyway, we're looking at Facebook. When you look at Facebook out here, it's just going sideways. I don't know what anybody else thinks about this. There's nothing to be gleaned by this other than someone's either getting ready to buy this or sell this. Somebody's put a bid under this thing and is holding it here, and a bet over it. Anytime it goes up, they come right back in and sell it. I just don't see a whole lot. I think this thing goes sideways for a little while. One of the other stocks that's moving out here is Google. And it's not moving that big. But there are some people out here that were short it. And little self-serving downgrades today in Google, and not much happened. Yeah. Anyway, what else do we have? Oh, we looked at that. APA, Apache Corporation. Dollar going up hasn't helped anybody. Certainly didn't help any of these companies. Let's look what we had out here for Apache, because there was some news. Downgraded to underperform from neutral at B of A. A little weaker this morning, got down to $60.12. But again, it's very hard to get anything going with a slight volume out here. Of course, this thing's basically back into the trading range now. So you may have a floor for the rest of the year in Apache. The $62 December 1st low at 7.3 million shares, and got 4.7 now. Could this thing just go sideways at the 62, 63s, and maybe all the way up to 65? I think it could, even with a weakness in crude. Big Lots, another one of these retailers coming out with news. Let's see what this one is. Missed Q3 estimates by a penny, missed on revenues. This thing had been a buyout candidate, and I think was a lot higher than it should have been. But anyway, this thing is sitting on two big gaps. Not a three-gap play. I was hoping to get one more gap up on this thing, and I'd been watching it. One more big gap, and I would have pulled the trigger on this thing like we saw last year. So I was hoping this thing gapped up, but no such luck for me. This is right back into the gap here at $40. That gap up had 6.9 million shares. We're back into it with about 7 million shares. So you're probably going to find some decent support around this $40 level. Got to a low of $40.50 so far. Another miss out here is BNS. What's on this? Reported earnings of $1.32 per share, including non-recurring items, 6% worse than the Capital IQ consensus estimate of $1.38. Revenues rose 6.5% to $5.85 versus the $587 billion consensus. So, yeah. Not bad out here, but looks like it's going back down to $56.52, which was the October 16th low. Another retailer, mall retailer, basically biting the big one, putting the Baby Ruth in the punch bowl out here is Five Below. And this is a store kind of like a dollar store, except everything's $5. I've never been in one, but I've read a little bit about it. Certainly, I guess, just about everything that could go wrong has gone wrong. It's a fairly new IPO. I hadn't been around a long time, so off 14% today. Guided to Q4 EPS below consensus and revenues below consensus both. Looks to me like it's going to quickly go back to $34.23, which is the July 21st low out here for it. FSL is upgraded to a buy. This thing wanted to, like a lot of these stocks, needs to go back up and fill this gap. This thing came down with fairly decent volume of 8.5 million shares back on April 25th. And what else? It would be up here at this. You got 3.6 million shares, I guess, today going in to that 8.5 million share down day. I think, boy, if you were long this thing, I think I'd have to be out of it somewhere around that $25 mark. It's probably going to get into that gap next week. My guess is the options are going to lock this thing at $25 for Friday's expiration. Gildan Activewear, GIL. Let's see what this one had. Upgraded to strong buy from outperformant Raymond James. A lot of people coming out and yelling and screaming on it. And, of course, a great deal of this is painting the tape and manipulating stock prices this time of year. This thing blew down on heavy volume yesterday. It's back up with light volume today. But this thing blew through a lot of lows. My guess this thing's probably going to play around up here in that $56 range, $57, and then you're going to get a shot for it to come back and get into the $47, $48 range from that March 14th low and the April 11th low out here at $48.29. HCP is another one out here. Weakness in REITs. A strong job report would raise the Fed's fund rate, and apparently this stock does not like it. This thing's kind of been a false breakout above the $42.28 high of May 9th. You need 4.6 million shares, and you never really got that sign of strength. You had 2 days out here where this thing kind of had a push. The first and the second out here, and then that's pretty much it. But to me, it kind of looks like a false breakout. Look for that thing to close back under $43.44, and then over time come back down to $34.91. KeyCorp, this little guy is popping, is a active target for an activist investor. I think it's Icon or one of those other big names out there, is at least the rumors that have been floated. Energy back up off this low of 11.55 has been fairly decent, so not so bad. October 15th, $11.55 is out there. Of course, that low has not been tested. It's a 45 million share low, so probably a good chance we're going to get this one tested. Volume okay today, but look for this thing maybe it hits this $14.21 high from September 19th before we go out of this year. But boy, I'd have to say that if I was long this thing, I'd watch for it to rocket back down for this $11.55 on any market weakness. Northrop Grumman Corporation, NOC, big upgrade for this one. Of course, it's got some of the biggest contracts out there with the government for production of airplanes, and I think that a lot of people have been short this thing, and it took a chance to run it with a massive upgrade. Everybody in the industry putting some lipstick on the pig, as it were. But I think this had been planned for a while. We're probably going to see, if you're thinking about stocks like this that have gone sideways like this, in a fairly tight trading range, this one about $5 for 2 weeks, just look for these things to pop higher. There's not massive short interest in these things, but there's enough, and all they have to do is pop these things up and let shorts cover for the rest of the year. Another one out here is Real Blut, RBC. This thing's done everything it should have. It came right back into the gap. That gap came down from, what do we have here? What is that, July 30th? And what did that come down on? Is that right? Not pretty light volume stock out here, but certainly came down on the 1.5 million shares. It's up in here in the 150,000 share range. Pretty weak. So you'd want to watch something like this. Too light a volume out here, though, for me to short into the end of the year. And UAL, this thing spiked on yet another upgrade. Barron's had a positive article on it, but it's pretty much given back most of its move out here today. It's hard for me to think that these airlines are going to go much higher before the end of the year. Crude's probably down at some kind of low, and even then probably not going to depress the prices of jet fuel, which is really kerosene, JP4, JP5, JP6, all that. The different grades of jet fuel, probably not going to change the supply on that much lower than it's at now, at least from industry pundits. But that's pretty much it. Now, we have some questions out here on BABA, B-A-B-A, and the question is, I'm not exactly sure what we're looking at here. Hopefully it'll come up in a second. Let's go back here. Come on, Mr. BABA. And it's kind of pulling back after the IPO. The problem with this thing is, of course, who knows what they're going to do and what the books are going to look like and what they do. I'm just going to try to stay away from it. My guess is this will hold up even with the Shanghai market coming down. But it will probably just hold up better. Probably still will pull back if we have any huge problem with the Shanghai market blowing up. We talked about that in the first segment. But you know, the whole story of Alibaba probably not changing. They're getting into different things, investing into a lot of stuff. The only thing that can really affect this stock would probably be the Chi-Coms coming in and busting it up. Yeah, I mean, they're communists, so he's been able to get it this far. I'm wondering, though, is there a point where the communists just come in and start scraping money away from this guy? He's an awful easy target in China. So I'd always be worried about it. I'm just not going to play it, but I know a lot of other people will. We'll be back in a minute. Give me a call, 877-927-6648.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, oil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com.
TFNN has just announced a special sale for the Gold Report for a limited time only. To celebrate the 660th weekly issue of Tom O'Brien's Gold Report, that's more than 12 years, TFNN is having a special one-time sale. Right now, you can receive 60 weeks of the Gold Report. That's 14 months for only $600. We're offering Tom O'Brien's dynamic weekly newsletter at only $10 a week, half off the regular monthly price. By taking advantage of this special offer, you also get a signed copy of Tom O'Brien's best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, an $88 value. The Gold Report is published every Tuesday and provides subscribers with Tom O'Brien's expert commentary on the industry, as well as detailed information on a variety of mining equities. Not all gold stocks are the same. This offer is valid for current or new subscribers. All the details are on the front page of TFNN.com. The sale will be over before you know it, so act now and lock in this incredible price by visiting the front page of TFNN.com. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders, take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
Catch Tom O'Brien, professional trader and educator, founder of TFNN. Also, a special guest on CNBC. Tom will bisect and dissect the markets. The Tom O'Brien Show, next on TFNN.
Let's put some lipstick on this pig.
And are they? They're going to put some lipstick on this pig before the end of the year. Not much. But they're going to try to pretty this thing up and run this market into the end of the year. And like I said, I think that they're going to do, if it's hook by crook, they're going to hold this thing up into the end of the year. And I'm looking for selling coming out the beginning. I'm not rabidly bullish or anything up here. When I look at options, it's telling me that we've got, could they get this thing up to 2,100 on the S&P? I think the answer is yes, but boy, this would be at the very far end of what options are telling me. But I don't think that it's beyond the scope of reason that they won't try to juice this thing. My guess is that they will try to juice this thing next week. We're probably going to see 18,000 on the Dow on Monday. They're at least going to get it up there for a minute or two and send everybody into a nice euphoric Christmas season in the markets. But I've been talking about this for a few months. It really makes me feel like 2008 where everybody was all teed up to come in and then just get these taken out. I don't think anything's going to happen before then, and it may not happen then either, but I just can't see taking any swings at this market until the first of the year. Maybe there's something else going on. Now, maybe we could have China and that Singapore market that we talked about, or Shanghai market talked about earlier. I mean, that is a bubble. There's no way to look at that chart and not think it isn't. But you get, basically into the first of the year, you got a couple of weeks. Then China goes on vacation for 10 days. We're seeing a lot of pops in stocks that supplied Apple, mostly because they had to order the parts before China closed. They also had to get the units manufactured before China closes. So you always get kind of a pump and a bump for the 10 or 12, 14 days it takes to get production started yet again in China. And that tends to put a lot of lipstick on the pigs here at the very end of the year. So just be wary of that we're probably going to see a little bit of a I'm at least thinking that we get a little hangover, and not the kind of hangover you get from a fuzzy navel, but the kind you get from a Bacardi 151 hangover. But that's just my thoughts at the moment. But not jumping in, not feeling froggy here, not jumping anytime soon. Volume is going to remain light. Like we said, it's been falling off a couple 100 million shares a day since the beginning of the week. We're just at 2.3 billion shares on the New York Consolidated Tape, and there's just not much to say there. We got a lot of stuff coming up in the 4 o'clock hour with Tom O'Brien. Of course, he starts wrapping up the week here in the next segment. I see him all he's getting ready. But it's not a lot probably going on, at least with the indexes. They didn't move that much today. 2 points, not a big deal. Like I said, I don't see a whole lot of upside. I just don't see any downside. So I'm going to play maybe an individual stock or two, a few for short squeezes next week. That's pretty much going to wrap up my year of trading. Going into the end of next week, which I'll be on vacation for a couple weeks, although I've got lots of stuff planned for my subscribers, and we'll be rolling that stuff out next week. But we will talk about it. Anyway, we will see you in about an hour on the Tom O'Brien Show. We got lots of stuff to talk about in technology this week, and I'll look forward to listening to Tom on the way at tfnn.mobi. So I can listen while I drive. Remember to sell when you can, not when you have to, and see you Monday. Same bat channel, same bat time.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
You're watching Tiger TV.